Economic downturns, market crashes, and financial uncertainty, they're all part and parcel of the game. And if you're not prepared, they can wreak havoc on your wealth. But fret not, because today we're going to unveil the secrets to transform this recession into a once-in-a-lifetime opportunity to build wealth like never before. We're not here to sugarcoat the situation. We're here to equip you with the knowledge and strategies to not just survive, but thrive during these turbulent times. Number 1. Understanding the recession. Before we get into how to build wealth during a recession, let's understand what a recession is. Simply put, a recession is a significant economic downturn, often characterized by a decline in economic activity, rising unemployment, and lower consumer spending. It's a challenging time for many, but it's also a time of potential transformation. Recessions are a natural part of the economic cycle, typically caused by various factors, such as a decline in consumer confidence, reduced industrial production, or, as we've seen more recently, external shocks like a global health crisis. They create a domino effect, impacting businesses, jobs, and the overall financial well-being of individuals and families. Unemployment rates tend to rise, and financial hardships become more prevalent. However, it's important to note that while recessions can bring about financial strain, they also pave the way for innovation and change. It's during these periods that individuals, companies, and economies reevaluate their strategies and pivot towards more sustainable and efficient methods. Innovation becomes the driving force, leading to the birth of new technologies, business models, and even industries. From a financial perspective, understanding the different phases of a recession, the downturn, trough, recovery, and expansion is crucial. Investors who comprehend these phases can make informed decisions, finding opportunities when markets are undervalued and poised for growth. Moreover, governments often introduce stimulus packages and policies to revive the economy during a recession. Understanding these initiatives can help individuals leverage potential benefits, such as tax breaks, incentives, or subsidies, to strengthen their financial positions. Ultimately, while a recession presents challenges, it also fosters opportunities for growth and financial progress. It's not just about surviving but thriving during these economic downturns. Stay tuned as we explore how to leverage these opportunities for wealth creation. Number 2. Historical perspective. Recessions are a part of the economic cycle, and history has shown that they can create opportunities for those who are prepared. Think about companies like Disney, Microsoft, and even Apple. They all started or expanded during economic downturns. The lesson here is that recessions can be a breeding ground for innovation and growth. During the Great Recession of 2008, some of the most influential companies of our time, such as Airbnb and Uber, were born. These tech disruptors took advantage of the economic climate and capitalized on unmet needs within their respective industries. They saw opportunities where others saw only challenges, and that visionary perspective turned them into multi-billion-dollar enterprises. Moreover, it's not just about companies. Individuals have also capitalized on recessions. Many successful investors, including Warren Buffett, made significant gains during economic downturns by investing in undervalued assets. Buffett famously said, "Be fearful when others are greedy, and be greedy when others are fearful." This strategy illustrates how he saw opportunities where others saw risks. It's also important to acknowledge the role of governmental initiatives during recessions. Stimulus packages, infrastructure projects, and economic reforms have historically driven recovery and laid the groundwork for future growth. The key takeaway from these historical perspectives is that a recession, despite its hardships, can be a fertile ground for those who are resourceful and innovative. By embracing change and looking beyond the immediate challenges, individuals and businesses can position themselves for success in the long term. The ability to adapt, innovate, and recognize opportunities amidst adversity is the hallmark of successful wealth creation during economic downturns. Number 3. Entrepreneurship. Starting a business during a recession may sound counterintuitive, but it can pay off significantly. Many successful businesses, including Airbnb and Uber, were founded during economic downturns. Identifying unmet needs and providing solutions can lead to significant wealth creation. During recessions, consumer behavior often changes. New problems emerge and existing solutions may no longer suffice. This shift creates opportunities for innovative thinkers and entrepreneurs. Those who can identify these unmet needs and provide solutions can lay the groundwork for highly successful ventures. What's intriguing is that during economic downturns, resources such as talent and real estate might be more affordable. Skilled individuals who may have been laid off or are seeking new opportunities might be more willing to join startups. bringing their expertise to the table. Additionally, office space, materials, and other overhead costs could be more reasonably priced due to decreased demand. Furthermore, the digital landscape offers unparalleled opportunities for aspiring entrepreneurs. Online businesses, remote work models, and e-commerce platforms have shown immense growth during recent recessions. The global reach and reduced entry barriers in the digital sphere provide a conducive environment for business growth, regardless of economic circumstances. Success stories like WhatsApp, Groupon, and Square, which emerged during economic downturns, exemplify how well-timed and innovative entrepreneurship can thrive. Therefore, those who have a vision, resilience, and a solution-oriented mindset can find success during recessions. In essence, while starting a business during a recession is challenging, the potential rewards for those with innovative ideas and the drive to make them a reality can be substantial. Those who understand the changing needs of the market and respond with creative solutions stand a chance to not only weather the storm but to thrive in the long run. Number 4. Real estate opportunities. Real estate is another avenue to explore, presenting unique opportunities during a recession. Property prices may drop, making it a prime time for real estate investment. However, it's essential to be cautious and do your research to make well-informed decisions. One of the most evident advantages of investing in real estate during a recession is the potential for buying properties at lower prices. Economic downturns often lead to decreased demand, causing property values to decline. This dip in prices can be an advantage for investors looking to expand their real estate portfolios, or individuals seeking to enter the market for the first time. Moreover, during recessions, mortgage rates tend to be more favorable. Lower interest rates provided by financial institutions and the government aim to stimulate the real estate market. This situation can be particularly advantageous for buyers, as they can acquire properties at reduced costs and potentially benefit from lower borrowing rates, thus enhancing their investment opportunities. However, it's crucial to approach real estate investment with caution and diligence. Thorough research, including market analysis, property inspections, and evaluation of the long-term potential of the area, is imperative. A recession doesn't guarantee immediate returns, and patience may be required as the market recovers. Another aspect to consider is the potential for rental income. During economic downturns, the number of individuals seeking rental properties might increase, as some individuals opt for renting over buying, due to financial constraints. This scenario can create a steady source of income for real estate investors, mitigating the impact of the recession on their overall investment strategy. Ultimately, real estate investment during a recession can be a strategic move if approached with prudence and a long-term vision. It's a time when those willing to invest their time and resources into well-researched properties might secure potentially lucrative deals in the long run. Number 5. Diversification and emergency fund. Another crucial aspect of wealth building during a recession is diversification. Having a well-balanced investment portfolio and an emergency fund can help you weather economic storms without significant losses. Diversification is the key to reducing risk in an investment portfolio. It involves spreading investments across different asset classes, industries, and geographic regions. During a recession, certain sectors may be hit harder than others. By diversifying, you can potentially mitigate losses if one sector underperforms while another holds steady or performs well. For instance, a portfolio consisting of a mix of stocks, bonds, real estate, and commodities can provide stability and potential for growth despite market fluctuations. Moreover, within the stock market, diversification involves investing in various companies across different industries rather than concentrating investments in a single company or sector. This strategy lowers the overall risk of the portfolio as the performance of one stock is less likely to significantly impact the entire investment. Having an emergency fund is equally crucial. It acts as a safety net during financial downturns, offering a cushion against unexpected expenses or loss of income. Financial advisors often recommend maintaining an emergency fund that covers 3 to 6 months' worth of living expenses. This fund provides financial security and helps avoid having to liquidate long-term investments at a loss during tough times. Additionally, don't overlook the importance of regularly reviewing and rebalancing your investment portfolio. Market conditions change, and what might have been a well-balanced portfolio earlier might need adjustments during a recession. In summary, diversification and an emergency fund act as pillars of financial stability during recessions. They allow individuals to navigate economic storms more resiliently, ensuring that they're better positioned to seize opportunities for wealth creation in the recovery phase. In conclusion, a recession can be a once-in-a-lifetime opportunity to build wealth if you approach it strategically. Stay informed, make well-researched investment decisions, and consider starting your own business. Remember, it's not about timing the market. It's about time in the market. Keep building your financial knowledge, stay adaptable, and you might come out of this recession wealthier than you went in.